Hello again, fellow BeachBum traders. Thank you for joining us for part one of our weekly trading game plan for the trading week of December 9th through December 13th. We're in part one of our weekly trading game plan. We'll try to help you make money trading in December of 2024. So let's get started. Welcome, Alan Krantz. Thank you for joining us in the chat today. Hope you had a great trading week and are doing well. So here's our Google document with our notes for part one of our weekly trading game plan for December 9th through December 13th. We keep our notes for our weekly trading game plans in publicly accessible Google documents. Our weekly trading game plan notes Google documents contain links to bonus videos to the tools and resources we use to do our market analysis, come up with our trade strategies, trade ideas for this trading week. You can find a direct link to that Google document in the description box below. We keep all of our weekly trading game plan notes, Google documents in a publicly accessible Google Drive folder, so you can refer back to the notes for this week as well as previous weekly trading game plan notes, and you can find a direct link to that Google Drive folder also in the description box below. So if we start by taking a look at how the markets ended up on Friday, go to the main page in FinBiz. See the Dow was down about 0.3%, NASDAQ was up 0.81%, S&P up 0.25%, and we had a strong market on close candle on both the S&P and NASDAQ. Again, the Dow just kind of bleeding out a little bit. We had 56% advancing, 40% declining, 81% new highs, 19% new lows, 63% now above their 50-day moving average, 37% below, and 67% above their 200-day moving average, 32% below. So generally a bullish day overall. We look at the heat map, we can see most of the Mag 7s were green on Friday with the exception of NVIDIA. Also very negative on United Health, sad murder of their CEO, driving that down. Also industrials a little red, energy, utilities, financials recovered a little green. Welcome, Gerald Fitz. Thank you for joining us. Hope you had a great trading week and are doing down. Look at some of the news. Housing market should pick up, but choppy. Bitcoin, the spot Bitcoin finally broke over 100,000, retreated back down. It looks like it's testing that resistance now at 100,000. Dow 4,500, and then retraced a little bit. Momentum mania sweeps the market. S&P record close again on Friday, third straight winning week. Solid jobs report. We'll talk about the jobs report. Rate cut bets. So again, we'll talk about the impact of the jobs report on the probability that the Fed will cut rates again in December. Saw oil breakdown below 70. Look like it might even drop below 67. We'll talk about some opportunities on further breakdown in oil. Natural gas support at 3, resistance at 350, kind of bouncing in that range. Gold we'll see consolidating right around 2650. Right now, Dow futures pointing down, all the other indices pointing up. Again, we saw Bitcoin, spot Bitcoin broke up over 100,000. I can't remember how high it got, 102, 3, 4, etc. Then retraced back down. So now it's trying to re-break that resistance at 100,000. Saw bond yields retrace quite a bit. So now the 30s back down below to about 4.3. 10 years down 4.15, 5 years at 403. So again, on the strong jobs report, we'll see a drop in all the bond yields. So bond prices trending back up. We look at a breakdown of the major indices and the technology components. And just a quick reminder, you can access these screeners via the links in our notes and also in the screener sheets in our ETFs and watch list Google Sheets. So we see all the indices relatively strong. Dow breached that upper trend line, retraced slightly. IWM ran up, broke through its upper trend line, retraced a little bit more. Q broke out of its upper trend line, so a lot of strength, a lot of momentum in the Qs. S&Ps kind of hovering in the middle of this upwardly trending channel. So again, all the indices relatively strong. Qs, S&Ps much stronger than the Dow. Looks like it might be rolling over a little bit, and IWM as well, trending down right now. Welcome, Katon. Thank you for joining us. Hope you had a great trading week and are doing well. So if we look at a breakdown of the technology components, we see all the technology components did generally well. ARK-K had a major breakout. It's been trending up. There's a lot of strength in ARK-K. We'll talk about opportunities when that peters out. Again, just a quick reminder, none of our content should be considered financial advice. We're not financial advisors. All of our content is for education and entertainment purposes only. But just in my humble opinion, this exuberant pop in ARK, I think, is vulnerable to tax loss selling, as we've talked about. So we'll be looking at finding the top in ARK-K and looking for opportunities to short ARK-K using the SARK leveraged inverse ETF. So again, it's been strong, waiting for that to peter out and reverse and look for opportunities to short that with SARK. Just while I'm here, let me zoom out on that ARK-K chart a little bit. So if we zoom out on ARK-K, see it's touching its 200-week moving average, so that might provide some resistance. Also, if we zoom out to the monthly, it's very close to the 200-month moving average. So again, I think either of those 2 points may provide some resistance and be a good opportunity to short ARK-K with SARK. Bang U's also very strong, broke out of its trend. Gapped up, get a lot of momentum, a lot of strength, back in the Mag 7, back in the fangs. This one, though, I think has the reverse momentum going into the end of the year and what they call window dressing. I think a lot of money managers are going to want to have the FANG stocks, the Magnificent Seven, on their balance sheets at the end of the year. So I expect that momentum in the Mag 7 and the FANGs to continue. Biotech's not so much. Again, looks like it's getting resistance, possible death cross there. Also, in my humble opinion, I think biotechs are going to be very vulnerable to tax loss harvesting going into the end of the year. So again, I would expect a downside on biotech. Again, a lot of volatility, so you can trade that volatility with LabU, LabD. Semiconductors have been generally weak, pretty flat, so they're not participating in that exuberant run we saw in the FANGs and the ARCs. So possibly, turnaround in SOXL. We'll talk about ways to trade that opportunity, swinging semiconductors back up. The overall NASDAQ just leveraged with TQQQ. In the broader technology, you can see it's just testing that upper trend line, generally strong, but again, driven mostly by the FANGs and some of these ARK-Ks. So I hope that all helps. Again, opportunities to make money trading in December. I think momentum continues with the FANGs. I think it will break with the ARCs, and your money losing companies also break with biotech. And again, we'll look for a swing back up in semiconductors. So I hope that all helps. Okay, let me grab a quick drink and we'll go look at the groups, the sectors, and the industries. Just trying to watch the chat a little bit too. Welcome, Baloo Dog. Thank you for joining us. Hope you had a great trading week and are doing well. Welcome, Fairchild. Thank you for joining us. Hope you had a great trading week and are doing well. So here's a breakdown of the sectors, groups in FinViz. We can see on Friday, consumer cyclical, communications, and technology were strong. Weakest, very negative for energy, utilities, basic materials, defensive. So generally risk on day on Friday. For the week, similarly, so consumer cyclicals, communication services, technology, again, risk on weak. So defensives, energy, utilities, basic material, pretty negative. I was a little surprised that real estate was negative, given the retracement in bond yields. For the month so far, again, pretty much risk on, although we've got some defensives for the month, some utilities, real estate positive for the month. Again, energy's been trending down for quite some time, basic materials as well. Got the industries, a lot of retail at the top, some biotech. So again, risk on. Some REITs. Negatives for Friday. Some REITs, industrial REITs, healthcare REITs, basic materials, steel, copper, silver, gold. Again, all retracing right now, and very negative in oil in general. For the week, again, a lot of retail positive. Again, retail season right now. We had, record Black Friday, Cyber Monday data. We can look at that in the Discord as well. Uranium slightly positive. Metals mining slightly negative. Again, a lot of materials negative. Silver, gold, copper. Some REITs pretty negative. Again, oil very negative. Steel, coal. So for the month, similar retail, uranium very positive for the month. Some REITs, little positive, some REITs negative, gold pretty negative, silver very negative, steel, chemicals, etc. So next we'll look at some of the economic data from last week, and then we'll look at the upcoming economic data for next week. Just a quick reminder, as the important economic data and news comes out, I try to capture that, post it as quickly as possible in the Surf the Markets channel of our Discord. Our Discord's free to join. We'd love to have you join and participate in all kinds of discussions related to trading, and also get real-time economic data and news in our Surf the Markets channel in our Discord. Again, I try to capture a screenshot from investing.com, the raw data, and any important economic news as well, and post that in the Surf the Markets channel of our Discord, so we can see here's some news out of OPEC to unwind their oil production cuts gradually, but they're delaying that until first quarter of next year. So they're delaying their output hikes. So again, trying to keep oil prices up, but we also see inventories decline significantly, and the oil prices went down. Also, here's the data from Cyber Monday. So again, we got record sales for Cyber Monday. So very positive again for retail. So again, we'd love to have you join our Discord, participate in discussions regarding all aspects of trading, help each other out, help each other make money trading, and you can get real-time economic data and news. So additionally, some of my notes from the economic data from last week, so not a whole lot Monday through Wednesday. Thursday, we got jobless claims data, job cuts. So job cuts up just a little bit, but pretty much in line. Initial claims is a little bit higher than expected. Continuing claims dropped a little bit. So people are still able to find jobs, but you have a few more people looking for new jobs. The overall average pretty steady. didn't get a real negative reaction to that. So again, it shows the jobs market is relatively resilient. So again, in my humble opinion, that's not, a reason for the Fed to cut. But then we'll see Friday, we got non-farm payroll data. And I think the key points that people focused on was the unemployment rate ticked up. It was expected to go to 4.2, went to 4.2. The U6 went up to 7.8. Participation rate dropped a little bit. The non-farm payroll is better than expected. Manufacturing, the weak sector. Hourly earnings went up a little bit more than expected. And again, I think people focused on that bump up in unemployment, and the probability that the Fed was going to cut, I guess, jumped up into like the 80% or so of a 25 basis point cut. And we saw bond yields drop and, generally exuberant reaction to further rate cuts by the Fed. In my humble opinion, again, I don't think they need to cut. But I think they will. That seems to be their propensity, their trend right now. So I expect them to cut 25 basis points in December, unless, as we'll see, we've got some important economic data coming up next week, and that may throw a monkey wrench in that rate cut and may create some volatility in the market. So we'll talk about that in a second. Also got Michigan consumer sentiment. Another point that would argue against the cut is the 1 year expectations went up to 2.9, 5 years still above 2, it's in the threes. So the consumer still believes they're going to have high inflation. Sentiment did bump up a little bit, so they're feeling okay, but expecting higher inflation than the Fed would want. So again, in my humble opinion, that may be a reason for the Fed not to cut in December. But again, all indications are that they will go ahead and cut in December, as they've kind of set the path to do so. So we'll look at all the rest of the data from last week and data for next week, but just some highlights is Wednesday, we've got CPI data. Thursday, we've got PPI data, and then typical weekly jobless claims data. Again, in my humble opinion, if the CPI and or PPI data comes out hotter than expected, that may stifle the probability of a Fed rate cut. And again, the market might react negatively to that, and additional volatility, Wednesday, Thursday. If we get hotter than expected inflation, again, that may quell the probability that the Fed's going to cut in December. Let me grab a drink and we'll look at the rest of the data from last week and upcoming data for next week. Welcome, Walter Lyons, The Crow, Gerald Fitz. Thank you all for joining us today. Hope you all had a great trading week and are doing well. We look at the rest of the data from this week. See, construction spending went up a little bit. ISM manufacturing pretty much in line. Bond auctions not too bad. JOLTS, this was also interesting data point that the number of openings went up. And again, this is a data point that the Fed's looking at, Powell's looking at, and it shows that there's some discrepancy between job openings and those looking. So this may be another reason for them. It shows the job market is continuing to be resilient, and maybe they shouldn't cut. Crude oil stocks went up on Tuesday. Mortgage rates dropped a bit, so again, good for housing. Talked about the ADP number. So ADP showed less than expected change, but then we got non-farm payroll. So this was for November, but then we got non-farm payrolls a little better than expected. Non-manufacturing weakening a little bit. Crude oil inventories again dropped significantly, but again, oil prices dropped back down below 70. Powell talked on Wednesday, and I guess he was putting a damper a little bit on some of the rate cut talk, but it still sounds like they're going to cut. Talked about the OPEC and Challenger job cuts. Talked about jobless claims. Bond auctions again pretty good. Talked about non-farm payrolls and Michigan sentiment. I believe now the Fed should be going into their quiet period before their next meeting, so we won't have as many Fed speakers talking. I was very interested in this rig count. It came out a little late yesterday, but as you can see, the rig count actually went up. So that should, again, be more supply, should be downward pressure on oil. So we'll see if we get a further dip in oil. Overall rig count went up. So again, interesting given the price did decline. If we look at the data coming up for next week, got some consumer inflation expectations. We'll see if that's higher than expected as well. Optimism, got productivity, unit labor costs. Then Wednesday again we get CPI data, very important. Again, if this comes in hotter than expected, shows that inflation is stagnant. Might be a reason for the Fed not to cut. And Thursday we get PPI data, so producer inflation data. Again, this comes out hotter than expected or stagnant. Might be a reason for the Fed to hold off on cuts. Friday, not a whole lot, Baker Hughes, etc. So we should be wrapping up in earnings, but you can see the earnings calendar as well. Anyone knows? So we got Oracle on Monday, so we've got some significant AI, so that could get some AI FOMO going again. So again, you can see the whole list in investing.com. AutoZone, Auto Parts, GameStop. So meme stocks will be in play on Tuesday. Uranium, popular uranium UEC. So again, I would highly recommend you go through the list, see what sectors, any companies you're looking to trade, how that may have an impact. So some more uranium, some steel, etc. Costco, so some retail, chips, Broadcom. So we still got some important earnings, although again, we should be winding down. It looks like Friday's pretty light, so I hope that all helps. Just a quick reminder, the next FOMC, next Fed meeting is the 17th and 18th, so we'll get the next interest rate decision on the 18th. We'll also get a new dot plot of economic projection, see what if they've changed their trend for the next year. So again, we'll watch the probabilities of a rate cut going into that meeting for next week, and probably next weekend we'll talk and look at the actual probabilities after the economic data from this week and see what's the probability of that further rate cut in December and also the path going forward into next year. So let me grab a drink and we'll look at the market screen in Webull. Just a quick reminder, if you're not already using Webull, they're still offering 40 free fractional shares of stock, each share worth $3,000 to $3,000. If you deposit 20 or 2,000 or more, under 2,000, you get 20 free fractional shares of stock, and worth $3,000 to $3,000. Also, they just had this offering, and we'll probably talk about this more tomorrow, and I'll post some things in our Discord that they're now offering 24-hour trading, so you can take a look at that. Trade 24 hours also in Webull as well. And if you'd use our affiliate link in the description box below, you can get your free fractional shares of stock, any other promotions they're currently offering, and trade 24 hours on selected stocks in Webull now. Welcome, Sydney Osborne. If I missed you earlier, thank you for joining us. Hope you're doing well. So here's the market screen on the online browser version of Webull. See advancers and decliners from Friday, pretty balanced. So even though the NASDAQ and S&P were up, again, in my humble opinion, driven mostly by the Mag 7 large caps, as the balance was pretty well balanced, and we actually had more small decliners than small advancers. Net inflow strong on the NYSE, although we saw the Dow go down. So strong and increasing in the NYSE. Typical outflow towards the end of the day on the NASDAQ. So again, probably some profit taking. I thought this greed index was quite interesting, as we were in greed for the month, for the week, and now we're just in the neutral territory. So if we look at the peak greed, we hit peak greed at about 71 on December 3rd, and retrace back down to 60 towards the end of the week. Can also, another feature here is you can zoom out. So we can see now we hit the highest of the post-election greed last week. If we look at it for the year, not quite as high as we were back in May, but it's the highest again post-election, highest we've been since spring of this year. So we hit a pretty high greed level and then retraced slightly. So thought that was interesting. Again, you can see the day-by-day earnings calendar here in the calendar tab in Webull. Scroll that to next week, see who's got upcoming earnings next week. There we see Oracle coming up soon, etc. So if we look at the industries for the week, auto parts pretty split, retail pretty positive. This is showing semiconductors positive, software very strong, retail again, communications generally positive, hotels pretty balanced, apparel again slightly positive. Your retail is showing uranium negative, so strongest CCJ, UEC, URLI. Retail pretty strong. Pharmaceuticals generally negative. Got the ETFs from Friday. So up on the Qs, short on the Dow, so down on the Dow, up on the S&P, up on the NASDAQ, up on Bitcoin, short VIX, up on the Russell. Industrials generally negative, financials pretty split, healthcare, mostly positive from Friday, utilities down, energy, real estate, mostly negative, communication positive, basic materials, lithium up, so EV, lithium, quantum computing, very positive, so technology positive, not defensive, so definitely a risk on. Commodities, bonds, we'll look at the foreign currencies and futures. Let's also look at the futures in FinViz. Again, we see, very strong S&P trending up. Looks like it's topping out right around that 6,100. But again, a lot of momentum, a lot of strength. NASDAQ even more so. So it played catch up, broke its previous high, trending up. A lot of strength in S&P and NASDAQ. Not so much in the Dow. Looked like the Dow breached 4,500 and is rolling over. Same thing with the Russell. So the Russell made a new all-time high and then started trending down. Looks like it's got support around that 2,400 or so. If that breaks down, we could get a test of the post-election low. Again, in my humble opinion, at some point we'll get a lot of tax loss selling. A lot of your money losers are in the Russell, so it may trend down through the rest of the year. We're going to see if we get a last hurrah retest of that previous high. And if so, I think, in my humble opinion, I think that may be an opportunity to short the Russell. And we've talked about using SRTY, or I think it's TZA, to short the Russell. So we'll see if we get a last hurrah test of a recent high, and then again a drop off through the rest of the year, and then swing back up into early next year. See a lot of strength in the recovery of the Euro stocks, DAX strong, Nikkei not so much. Again, the VIX, declining towards the end of the year. We talked about that trend. It's the actual VIX we'll see is down below 13 in the 12s now. So if we look at the VIX term structure, again, just a quick reminder, you can see this VIX futures term structure tool in the link section of our homepage. Our homepage is beachbumtrading.com, bum without the U. So again, if you scroll down, see the VIX futures term structure. So we see the current VIX is much lower than the VIX futures. So we've now got a pretty strong contango going out in the VIX futures, but still down 14, trending up to 18 into mid next year. Current VIX is down below 13. Again, we talked about the seasonal trend. VIX may continue to trend down and then swing back up into next year. And we talked about using UVXY or one of the other long leveraged, possibly selling puts on that. Once it does bottom out and swing back up, we looked at the historical prices, and today and yesterday are going to be similar, but we can see it's converging pretty much with the VIX future ETFs. So hope that all helps. Again, we see oil broke down, hit that resistance at 70, rejected all the way down, got support at 67. We'll see if it breaks at 67. If so, we're looking to go long with USOY, monthly dividend payer on oil. Again, if USO touches a recent bottom, we're looking for an opportunity to collect monthly dividends on oil and just scalp it, up to that 70 resistance. Natural gas, again, support at 3, resistance at 350, very volatile. The long-term trend is up. Again, gold consolidating right around 2650. So we'll see if this consolidation results in another push back up. But it's got, significant resistance just above 2700, good support at 2650, 26, etc. Silver, heavy resistance at 32, so it keeps testing that 32 resistance, getting rejected. We'll see if it rolls over and trends back down. Again, materials generally weak, so platinum trending back down, palladium back down. Other commodities pretty mixed. Corn swung back up. Oats peaked out at 380, got rejected, headed back down. Wheat bounced back up. It's got pretty good support just above 540, heavy resistance at 560, then 580. We do get a rollover in wheat, might be an opportunity with the WEAT ETF, cocoa trending up. I know Easy Mike, if you're looking for a broad basket ETF on commodities in general, I believe Easy Mike, Katon likes DBA. You can confirm that, Katon. Also, again, we saw bond yields retrace, so bond prices up. So again, all the bonds swinging back up. If we get further rate cuts from the Fed, again, that trend should continue. If they don't cut, we might see a flattening out on the bond price curves. Dollar weakened just a little bit, back down to 105. Euro bounced back up. Yen and Swiss franc, but Canadian dollar, Aussie, and Kiwi dollars still pretty weak. So I hope that all helps. Just a quick reminder too, you can also now trade futures in Webull, and you can get more information about trading futures in Webull via the link to the discussion in our Discord. Yeah, I thought you liked DBA. Katon, Easy Mike likes DBA for a broad basket of commodities. And we can look at some other ETFs in a moment for commodities in general, etc. First, I want to grab a drink and we'll talk about our theme for this week, which is Make Money Trading in December 2024. Let me grab a drink and we'll go through our theme and strategies for making money trading in 2024. Okay, again, our theme for this week is to make money trading in December 2024. So firstly, we'll go look at the chart for the historical trends of how does December tend to perform. So again, we can see generally November is the peak, and then we have a drop off in December, but December is generally positive. So you see the past 5 years, 10, 20, since 1950. So in the past 5 years, December's been a little bit better than in the past 10. Overall, again, slightly positive, but not nearly as good as November. And again, once we get to January again, slightly positive. But again, we've kind of, historically hit our peak in November and drops off a bit in December. In my humble opinion, that's probably a mixture of tax loss harvesting being downward pressure, tax loss selling downward pressure, and then what we call window dressing being a positive pressure, and the net being just slightly positive. So again, December is generally positive, but not so much as get maybe a 2% over the past 5 years in December, whereas in November, 5+%. Um, so again, being more selective in the stocks we're looking at in December. Again, we don't want money losers, those vulnerable to tax loss harvesting, tax loss selling. Again, if you're not familiar with what that term means, tax loss harvesting, tax loss selling, and what the rules are for when you can buy back, the wash sale rule, you can get more information via the links to those videos in our notes. Additionally, I also asked ChatGPT, how do the stock markets perform in December of a presidential election year? And you can access the answer, ChatGPT's answer, via the link in our notes. So we can see December of a U.S. presidential year often brings heightened market activity, tended to perform well in December, regardless of whether it's an election year. We'll talk later this year about about the Santa Claus rally, what that means, how that impacts the end of the year and beginning of next year. See in presidential election years if the market's comfortable with the election outcome, being pro-business, rally may be even stronger. So we've seen that exuberance since the election. So the expectation would be that that exuberance would continue into the end of the year. We didn't really get a lot of uncertainty in elections, so don't expect that to impact the performance in this December. But again, if you in future years, if we have a contested or uncertain election, may cause increased volatility. Certain sectors may have pronounced movements depending on the president-elect's anticipated policy. So we talked about, Trump stocks and non-Trump stocks over the past several months. So infrastructure, and we've talked about oil, energy, and reversal of, EV, solar, etc., and positive for oil, etc. Also the healthcare headwinds due to RFK during the transitional phase. They pay close attention to administrative policies, executive orders of the outgoing administration. So we'll see if we have any impacts from that. And Federal Reserve policy. So again, broader factors are more significant than the presidential election in December of an election year. So again, I hope that all helps. Again, you can read this in more detail via the link to this answer from ChatGPT in our notes. Again, we've been talking about how to make money trading in December for several years. You can hear how the market also performs in December. Typically, the best performing sectors and industries in December via the link to those videos in our notes. And again, you can learn more about tax loss harvesting, impact on the markets, and also the wash sale rule and the Santa Claus rally via the link to those videos in our notes. And again, towards the end of the year, we'll continue to talk about tax loss harvesting and that impact, and also the Santa Claus rally at the end of this year going into next year. Also, again, December, first half of December is still in the fall, so you can hear the tendencies in the fall and best performing sectors and industries in the fall, and then we'll soon switch over to winter. Okay, next I'll go back to ETFs. Now that we've got all of our market analysis, our trading strategies for this trading week, and we can identify ETFs that we want to use, be it a long idea or a short idea. And we use our ETFs Google Sheet to then find ETFs with the risk reward profile, leverage, etc., that we want to use to exploit those trade ideas. Again, you can gain access to our ETF Google Sheet 24/7. So again, you can do likewise. Take your trade idea, be it long or short. Use our ETFs Google Sheet to find an ETF with the risk reward profile, leverage, etc. that you would like by joining our Patreon. So let me grab a drink, and I've got some enhancements and some additions to our ETFs Google Sheet. And then if anyone in the chat has particular ETFs that you want to take a look at, or a particular topic, theme, etc., we can also take a look at those in our ETFs Google Sheet. Okay, again, if anyone in the chat has particular topics, themes, etc., you want to look at ETFs, you can throw those up in the chat, and I'll try to keep an eye on that. Just some quick enhancements that I made to our ETFs Google Sheet is I added an optionality column in our research sheet, and I also added the FinViz URL column in our ETF database sheet, and I'll show you those as well in a second. But the reason I added those is I was doing some research on South Korea ETFs. So we had that political turmoil, announcement of martial law, and then retractment. And I guess they're impeaching the president right now. So a lot of turmoil in South Korea. So there was the thought and questions about, okay, what ETFs can we use to long or short South Korea? So again, I go to the ETF database first and see what we can find. So I put a couple links to where you can find ETFs in the ETF database. Just a quick reminder too, you can also find the link to the ETF database in the link section of our homepage. So again, we've got all kinds of resources, tools for the ETF database also on our homepage. So again, that link will bring you right to ETFs with Korea selected. So South Korea, so we get 5 ETFs. So you can see EWY, FLKR, KRU, KORU, which is a leveraged, MKOR, and K-pop, which is focused on Korean K-pop entertainment. So what I do to start researching is I copy paste that listing into the ETF database sheet of our Google Sheet. So we can see that listing of all those South Korea related ETFs. So to make it easier, I also added the FinViz URL so that we can quickly click through those listings and go to the FinViz profile for those ETFs. So again, I added that in the ETF database. So again, you can always make a copy of our ETFs Google Sheet, copy paste the ETFs in the ETF database sheet, and then do your research from there. So again, I also added these to our research sheet. So here's the listing of all of the South Korea ETFs. You can see their current pricing. You see they're all steeply down. See the risk reward profiles. I put in some support and resistance levels so you can see their risk reward profiles. Also, again, I added optionality so we can see a few of these are optionable. So EWY and KRORU are optionable, whereas FLKR and MCOR are not. So I didn't add that K-pop one as that's specific to K-pop entertainment. So I just took those top 4. We can very quickly, using the FinViz URLs, flip through each of those. You see that big drop, in the turmoil. If you think they'll recover, you want a long, and see that big drop. It's not, at its bottom. And then using the profiles in FinViz, you can see if they're optionable or shortable. So if you're looking to short South Korea using a ETF that might be shortable, I'll also show you in a minute. I asked ChatGPT how to short the Korean market. But again, you can go through each of these and see what their constituent holdings are, and also what index. Actually, I found out you can see the index. So at the top of the FinViz profile, see this is the MSCI Korea. So again, this is based on the MSCI Korea index. We go to the next one. FLKR is not optionable. So similar trend. See, it is based on the FTSE South Korea index, so a different index. This is not optionable. It is shortable, so you could short that. And you can see the composition. KORU is a leveraged long, so 3x leveraged long. See its downtrend. That is optionable. It is also shortable. This one pays a dividend. So you can see it's also based on the MSCI index. So it's got swaps, etc. So it's based on another. So 3x the performance of the MSCI Korea 2550. So again, if you're looking for more leverage, again, this one is shortable as well. And if you think Korea is going to bounce, last one, MCOR. So an active ETF. So, a little bit different performance, pretty small AUM, doesn't have an index, it's actively managed, it's not optionable. You can see the current holdings of that active ETF. So again, you can compare the risk reward profiles, performance of each of those South Korea ETFs now in the research tab in our Google sheet. Love to hear any feedback if anyone's traded any of these South Korean ETFs before. Love to hear your preference, which one you like best, why or why not. Obviously, the leverage one looks like it's got the highest risk reward profile for the current 52 weeks. Currently, they're all very similar. KORU's pretty good. EWY's got a pretty good current risk reward profile. So again, if you think South Korea is going to recover, swing back up, you could long any of these ETFs. If you think there's going to be further turmoil, more downside, you could, if you're in an account to be able to short an ETF, a stock, you could short some of these, as we pointed out, the ones that are shortable. Also, if you're looking for other ETFs that have exposure to South Korea, I put the link into the country exposure tool in the ETF database. and you can click that link and then get a list of additional ETFs. So we see the ones that are specific to South Korea listed at the top, but then we've got a number of others, and the ETF database is saying that these other ETFs have exposure to South Korea. So again, you can find which ones, or if you happen to be holding these and you think you might have some vulnerability due to the turmoil in South Korea, you might see if your ETFs is in this list if you have exposure to South Korea. So again, I hope that all helps. Again, I also asked ChatGPT. I couldn't find an ETF to directly short South Korea. So I asked ChatGPT, what ETFs may I use to short South Korean stocks? And you can access the answer via the link in the notes. So as we'll see, we're looking to short South Korean stocks, inverse ETFs, etc. There aren't many direct. I couldn't find any direct inverse ETFs for South Korea, so no ETFs that you can directly short using an inverse ETF. So they said consider, Asia-focused ETFs that include South Korea. So they also pointed out this emerging market one, which we saw in the exposure tool. So if you could also short using EUM. So again, this is emerging market broad, emerging market one. See, I believe I have this somewhere in our database, so I can find on EUM. Oh, I guess not. So not one I put in our database before. We do have several other emerging market, and we do have some short emerging market ETFs. So I've got EDZ. So again, if you're looking for a leverage short on emerging markets, that may be an option. Or again, you can short the South Korea focused ETF, short EWY, short FLKR. Talk about risks of leverage, etc. Currency exposure. So again, no inverse, direct inverse ETFs for South Korea. But again, you could use ETFs that have exposure or are shortable if you have an account that you can directly short. Also, if you want to watch the Korean market, we previously looked at where you can see the global indices. So we saw both the FTSE and MSCI. Do a find for Korea. So you can watch all the current Korean markets. There's the MSCI. And if we look at the technicals, again, all are showing strong sell, strong sell. So again, current indications from this global indice tool in investing.com is more downside on Korea. So they're indicating a short. So again, you can watch the Korean markets as well as any other global indice using this global indices tool. I believe I have this also in our tools as well. So there's the link to the global indices tool on our home page in the link section. So I hope that all helps. So again, let me know your thoughts. Are you thinking long or short on South Korea? Why or why not? You can put it in the comments to this video, in our Discord, etc. Okay, let me check the chat, and very quickly we can look at any other ETFs. I know I'm running a little bit long, but again, I'll take a quick look at the chat. Welcome to Ricky Khan. Good to see you today. Hope your trading's been going well. So grab a drink and look at the chat. We'll whip through just a few other ETFs quickly. Okay, you can also see the ones we have long for emerging markets. We just talked about Korea. Tomorrow we'll look at BDRY again. Looks like an opportunity in dry bulk shipping. We've talked about that a little bit. Talk about gold, etc. About oil and natural gas, good short-term volatility. You can trade with oil long, gold short, or UNG long, UNL. Again, we've got single stock ETFs in our sheets. You can find two long or short single stocks with potential leverage. Talked about that decline in oil. So again, we're looking at a monthly dividend payer, long oil. But if you want a short DRIP or SCO, long GUSH or UCO or USO. Another bit of news is China restricting exports of rare earth materials. So again, long rare earth materials, ETF REMX, or like MP materials, single stock. Easy Mike mentioned DBA. So here's DBA, again, broad commodity. You can see the risk reward profile of that. Right now it's kind of high, kind of in the middle, got some more upside, but pretty high from a 52-week standpoint. Also, if you're looking for other metal ETFs, you do a search for metal. We've got a base metal one, I think it's DBB. There's lithium, REMX, rare earth. So here's another one, DBB, base metals. So you can take a look at that one. Also, we've got some on nickel, aluminum, etc. So NIKL for nickel, ALUM for aluminum. So again, you can do finds on our ETF Google Sheet, find a variety of ETFs on any topic, theme, etc. Bitcoin, if you want long or short, the futures, miners, etc. Been looking at Brazil. We talked about that over the past couple weeks. Also talked about cannabis. Might talk about MJ and its dividend a little more tomorrow. China, yin and yang, etc. So again, if anyone has any questions about looking for an ETF to trade a theme, topic, etc., you can put it in the comments, or again, contact us in our Discord. Please tag us in the Discord. We're BeachBum Trading, all lowercase, no other characters, symbols, etc. Anyone else is an imposter, and please report and ignore them. But again, if you're interested in us doing further research on ETFs or any topic, theme, etc., let us know in the comments or in our Discord, and we can again add those to our ETFs Google Sheet. We talked about shorting the Russell with SRTY or small caps with TNA, TZA. So there's TZA. So again, if I missed your question or your request for ETFs, please let me know in the comments in our Discord, and we can take a look and follow up on those either tomorrow or in a further live stream. So again, tomorrow we'll be using all of this information to select our top swing trading stocks to watch, stocks in our bullpen, stocks in our shopping list. We'll also be looking at how we can use dividend payers and various option strategies to generate income while we wait for our swing trading stocks to set up. So thank you again to everyone that joined us in the chat today, everyone who's watching after the fact. Again, we need your feedback as to what we can do to improve our weekly trading game plans, any of our videos, tools and resources, our community, our Discord, etc., to add more value for all of our fellow BeachBum traders. And we need your help. If you please smash the like button on our videos, help us try to get the YouTube algorithm to help us out and share our content with more BeachBum traders around the world. And again, we really need your help to directly share our content with other BeachBum traders around the world. Repost our content, invite them to join our chats, invite them to join our Discord. The more people we have helping each other out, helping each other make money, succeed in your trading career, and it's to the mutual benefit of everyone in our community. So again, thank you all for your participation, and hopefully we'll see you all back tomorrow where we'll take all this information to select our top swing trading stocks to watch, stocks in our bullpen, stocks in our shopping list, and again, we'll talk about dividend payers and option strategies again tomorrow. So thank you again and have a great day.